We're here today to talk about how the Royal Commission, Banking Royal Commission, is affecting the residential real estate market, on the projection of interest-only loans changing from their current circumstance to principal and interest in 2020, and how that's going to affect the residential market. So myself and Richard are going to go through explaining this to you today, and hopefully we can answer some questions. So thank you and welcome, Richard.
Hi, thanks Andrew, great to be here. The big change we've seen since the Royal Banking Commission is that on the back of that, the banks have been told that they need to do more to look at people's living expenses.
Yes.
So traditionally banks would just use a set amount for living expenses based on the number of adults and financial dependents within a household. That set amount would be used to gauge what people can borrow or afford as a loan. Now,
So that's your general living expenses?
Yeah.
So your rates and your car loans if you have them, and
Yeah.
school fees and all those things?
Yeah, exactly. So it used to be
Foxtel bills?
Foxtel bills, yeah, exactly.
Yeah.
It used to be a set amount. Now banks are saying we want you to complete a full budget. We want you to itemise into categories all your different spending, so groceries, holidays,
Okay.
utilities, and then that figure that you come up with is what we will use to assess whether you can afford a particular loan or not.
Right.
So they delve in a lot deeper.
Okay.
Yeah.
And in the future, when the loans do change over from interest only to principal and interest,
Yeah.
what is the bank looking for particularly?
Yeah. Again, they will ask people for living expenses and an updated position of how their financials look.
Mm-hmm.
And what they want to see is, okay, if we've got a 30-year loan term, you've had 5 years interest only maybe for this investment property that you've got.
Right.
What they'll actually do then is say, okay, can you afford the loan on an ongoing basis over a 25-year term?
Right.
Because you've already used 5 years of the whole term being over 30.
Okay.
Yeah.
And are you expecting a lot of people to refinance with different banks and move their loans around to get a better deal? Is that something you expect?
Yeah, definitely. That's something that we think a lot of people will look into because that can be a really good way of extending your interest-only period for another 5 years, is to look at a different institution. It's worth keeping in mind that the new bank will want to do a valuation on your property
Okay.
to make sure that you have that 20% of equity and they're not lending more than 80% of the value. Because if they are, there's every chance that you'll need to pay mortgage insurance again with that financier.
Okay. And do you think that people are better off now because Brisbane has risen, I think last statistics was 5% over the last 12 months? So they're better off refinancing now? Or do you feel that the banks are still quite tight and they will finance or do the valuations similar to what they were in the last 18 months?
Yeah.
Do you have a comment on that?
Yeah, I mean, every bank will instruct a separate valuation firm to do the valuation on their behalf. We find that from time to time those valuation amounts can vary quite a bit. But yeah, definitely as a whole we're seeing the Brisbane property market in a really strong, stable position. And that, yeah, people want to look at potentially refinancing. As part of the approval process, the bank will do that valuation. And sometimes people can get more than one valuation done with more than one bank. And that'll give them a really good idea of what the bank considers their property to be valued at.
Great. Richard, do you have any tips for a buyer in securing a home loan prior to going to the market so they can put themselves in a better position to either outbid somebody else or be in a better position to bid against another buyer?
Yeah, I think the biggest tip we can give people these days is to make sure, Andrew, they have that conditional approval in place from the bank.
Okay.
They have that bit of paper from the bank that says, we've assessed your entire application and we're happy with all these criteria. The only thing left for them to do is value the property once they're successful in negotiating a price or securing a property at auction. So, as you would know, when people go to auction to buy, if they're successful, it's then unconditional. So there's no finance clause with buying an auction. So people need to have the bank have done all the hard work on their application and make sure the only thing left to do is to value the property. So that'd be the biggest piece of advice I could give people.
So your strongest tip is get ready early, get organised, and so go with confidence?
Definitely, definitely. I mean, the other thing is that if people have that conditional approval and all the bank needs to do is value the property, if they're buying via private treaty, so they're signing a contract and there's a finance clause there, they can actually make that finance clause a lot shorter. Now,
So the timing used to be 7 to 14 days for finance conditions on private treaty,
yeah,
and obviously cash on auction day.
yeah.
Has that extended because of the Royal Commission? Is it now 21 days or 30 days? Because we are experiencing some extensions on
Yeah.
contracts
Yeah.
because of that. Is that the case?
Yeah, we are seeing as a whole that is the case. Because banks are now delving into people's living expenses and want to understand what people spend each month and going through their accounts, that means that's longer for them to approve a loan. So it's longer for them to get back to people and say yes, no, or this is what you're approved for. What I would say is if people can sign contracts with already having that hard work done, they can make finance clauses as short as 7 or maybe 14 days. If, however, they're signing a contract and then beginning the finance process, they're going to need at least 21 days in most cases.
Yes.
So,
Okay. And also we're seeing some further requests from buyers for a 45 to 60-day settlement term coming to auction,
yeah.
and they're making that pre-request to the sellers, and most sellers are agreeable.
Yeah.
Is that directly associated with the finance approval timing? Because they need more time to get their loan finished and approved?
Yeah, it is. So with finance, it's all a process of a number of steps. If that approval process gets pushed out and takes longer, consequently the bank is going to need more time to arrange settlement as well, because it's going to be at a later point when they're sending out loan documents for people to sign and finalise those final parts of the process before settlement.
Okay. Now, Richard, also, which is very important and dear to my heart, being an auctioneer and auctioning most Saturdays, I want as many registered bidders as possible,
Yeah.
and I want to make sure they're in a position where they can bid with confidence and do that. So, is it still possible for a buyer to go to the bank and get a loan and get a pre-approval to come to auction without having a contract signed prior to that auction?
Yeah.
Is that possible?
It is, Andrew. I would say to buyers, allow at least 2 to 3 weeks before that auction date to submit your application and get the bank to assess it on the basis that you are going to an auction. And one thing that the bank will want to know is what you anticipate that purchase price will be.
Okay.
Now that can change. That doesn't need to be locked in black and white, but they'll need an idea of where you think it would be. And I would say to people, provide the bank with the absolute maximum that you're able to go to.
Okay.
It's much easier for the bank to work back on a lower amount than try and reapprove you on a higher loan amount.
So does the bank do a desktop valuation for that client?
Yeah, good question. Generally, when it comes to valuations, the bank will want a contract of sale on hand to do that. Now, obviously, buying at auction, the only way that you'll have that contract in your hand is if you're the successful bidder. So it's at that point that you provide it to the bank and they then do the valuation once you're successful at the auction. So the idea is get them to do all the heavy lifting and the hard work before going to auction, so it's only that valuation they need to do.
As far as deposit is concerned too, do the banks have a further requirement for a greater deposit now, or are they still back in the old 70-30 loan ratio? Can you comment on that?
Yeah, I can. That's another really good question. What we've seen now is that in the last couple of decades is banks willing to lend people more than 80% of the value of the property.
Okay.
And to do that, they will take out insurance to cover themselves.
Because mortgage insurance?
Exactly, mortgage insurance. And that's because they consider that to be a greater risk, that particular loan. So one thing we try to tell people is that insurance is there to cover the bank. It's not there to cover the buyer. So that's one thing to understand. So the second thing is the banks can extend all the way up to 95% of the value of the property, or if you want to look at on the other side of the equation, a buyer really only needs to come up with 5%,
right,
plus some other associated costs such as stamp duty. However, they need to understand that at those levels of just putting down the minimum, the bank will look probably a little bit deeper into people's situation because there's greater risk from their end. It may come with a higher interest rate, and they'll also have to pay for that insurance as well.
Right.
So there'll be some more costs associated.
Okay. And the cost of that insurance, is there a...
It will vary based on the loan amount. Someone putting down a 5% deposit will pay more in mortgage insurance than someone putting down a 10 or 15% deposit.
Very good.
And also based on the loan size. So, but look, to give you a really rough guide, someone putting down a 5% deposit on a property with 600,000 might be paying anywhere from 15 to 20,000 in mortgage insurance.
Right.
So yeah,
It's quite substantial.
it is something that people definitely need to be aware of.
Okay.
Yeah.
Now back to personal spending too. How has
Yeah.
that changed for the bank?
Yeah, well, I guess we were talking a little bit earlier about getting that budget completed that the banks want. So the banks will look at what people declare as their monthly spending, but then they'll actually take it a step further and have a look at their accounts over the last 3 months. So, okay, what you've told me is your monthly spending. Is that accurate in what your spending's been over the last 3 months?
Okay. So what's the not to do for a buyer?
Yeah, we tell people to do a bit of a spring clean on your accounts.
Right.
And what we mean by that is go through the last 3 months, because that's generally the time frame the banks will look at, and make sure you don't have any overdrawings on your account.
Okay.
Banks really don't like that. That will get marked down on your application.
So make sure your bills are paid. Your
Make sure-
Foxtel bills paid.
Yeah, make sure-
Everything electronically is squeaky clean. before you go.
Exactly.
Okay.
All your bills are up to date. You haven't overdrawn on your account. You haven't gone over the limit on your credit cards is another big one that
Okay.
people need to be aware of.
Very good.
Yeah.
That's good advice at any time.
Yeah, exactly. And finally, I'd say, as part of that spring clean process, make sure that if there are other cards that you don't use regularly, that you do notify the bank about, or you cancel and get rid of them. Because
Right.
if the bank finds out about maybe a Myer credit card or store card you've got that you didn't let them know about, that can and really hamper your application as well.
Right. So you've got to be clear, very transparent, and very direct with the banks to get the green light and the good tick.
Yes, absolutely.
Okay. But because I see many and varied clients with different opportunities for borrowing money,
Yes.
so when would you like to see clients, if we refer them to you, at what stage do you like to see them? Do you like to see them very early in their search, to give an idea of what they can and can't buy? Or are you happy for them to go through the first 2 or 3 years, bring their last financial statements to you, and then proceed from there? So second and third home buyers are fairly straightforward, I would imagine.
Yeah.
But for a first home buyer, just as a little bit of advice, what would you say?
I would say as a general rule, maybe first home buyers, if you think that you're likely going to be wanting to purchase in March, I would be speaking to someone like myself in sort of September, October, maybe 6 months prior to when you'd like to be buying a property.
That's good advice.
Yeah, because we've got to remember that banks will look at your accounts over the last 3 months. So you want to make sure that when you go into making an application, your last 3 months are up to date and everything's clear and as it should be, to give yourself the best chance of approval.
Okay, very good. And someone who actually has a loan, who's just paying interest only now,
Yes,
and is just about to convert 2020 to principal and interest,
yes.
do you have any advice for those people, what they should be doing?
Yeah, definitely. Again, jump onto those sort of things as early as possible, maybe 6 months before that expiry date. Have a look if your existing bank will extend another 5 years interest only. Some will and some won't.
Okay.
Failing that, another option would be to potentially refinance with another bank or mortgage institution that might be willing to take on that debt for you on an interest only basis. And thirdly, maybe look at the option of paying principal and interest, because at the moment, if you're willing to pay principal and interest, usually you'll pay a lower interest rate than as opposed to interest only.
Great. And is now a good time to lock in to those interest rates, or do you think you should wait a little longer? You got any comment on
Yeah.
projecting into the future,
Yeah.
Richard?
Yeah.
Has everyone asked me that?
Yeah, always a really difficult thing to do, to try and anticipate what banks are going to do with interest rates. I guess at the moment we've seen the banks, most of the banks I should say, lift their interest rates by a small amount, and that's off the back of the Reserve Bank not doing anything. So the Reserve Banks stay on hold with their interest rates, but the banks have lifted theirs by a small amount. We think that we're going to be in a low interest rate environment for the next 2 to 3 years. That all the indicators are there for that to be the case. Whether you go fixed or variable really comes back to your own personal situation.
Okay.
If you want certainty around what your payments are going to be and you know you're going to be in that loan for the next foreseeable future, 3 to 5 years, then fixed rates could be a really good option. But if you want a bit more flexibility around your loan, being able to pay extra, and you want some, you think that you may want to change loans in the next 3 years or move properties, then maybe a variable option might be better, because a variable loan will come with a lot more flexibility and it's much easier to get out of as well.
Okay, very good. Well, I think it's an excellent advice, Richard. Thank you very much for coming today. We're just about to go an upward swing for the Brisbane market. Sydney and Melbourne have had their run, and lots of people are now travelling to sunny Queensland.
Yes.
So I think you and I are in for a busy time, Richard.
Yes, I think we are. I think you're right, Andrew.
And how can people get in contact with you?
Probably the easiest way for people to get in contact and find us is at our website. So our firm being Newbridge Financial Services, our website is www.nbfs.com.au, and there's lots of videos and hints and tips on there to help people. But, they can reach us there, and more than happy to sit down, talk to people and show them how much they can borrow and what they need to do to get an approval in place.
And thank you very much for your most recent contribution to the loan that we did in Auchenflower. You did an excellent job. The client was very happy, the seller was very happy, and your support during that process is very rare. And thank you very much for assisting in that process.
Our pleasure, Andrew.
Thank you.
Thank you.